makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Manus Cranny in Dubai. Here's what's coming up on today's programme. Microsoft submits a new deal to the UK regulators to get its $69 billion takeover of Activision Blizzard over the line. Treasuries are steady after global yields soar on the higher for longer rate bets. The US 10-year yield hits the highest since 2007 and Japan's JGBs rise to the highest in 9 years. Plus, we'll be live to Pretoria, where South African President Cyril Ramaphosa is hosting his Chinese counterpart, Xi Jinping. That's ahead of the BRICS summit. Very good morning, warm welcome to the show. Let's take a look at the European map. I'm surprised. Billy's profit is down by 37%, and yet you have this strength in the minerals and resources. Tech is on the up, partly due to the Nvidia ramping by 8% last night. Their numbers come this evening. ASML, ST Micro also drifting higher. You know, hope lives eternal. Nvidia better not disappoint tonight. There's the pre-market up 1.29%. We're now up 10% in the space of 2 trading sessions. Nvidia had better deliver. Now, Billy's profit dropped by 73%. I can tell you that was a little bit of a shock in terms of the actual scale of decline and the deposits. Is Europe cheap on a relative basis? Billy's is terms, while your SPOOs are up 15%. However, your profits are dropping much more aggressively in Europe relative to the United States of America. Across the assets, this is the state of play. I mentioned the bond market. I mean, they are literally on fire. What's the 101 rule of bond investing? When you got positive real yields, buy them. Bob Michael, of course, at JP Morgan Asset Management said he wanted to buy every dip. Sounds like the sound of music to me. But the bottom line is 10-year government bond yields coming off their zenith, the highest since 2007. But it's the real yield that you want to keep an eye on at 2%. What does that do to risk? JGBs testing the mettle of the Bank of Japan as JGB yields rise. What could happen next? The Chinese are nervous, to say the least. They have an unbridled currency, and they step in to try and pull it back on the reins as they do over 1,100 pips stronger in the fixing. Yet still, as New York wakens up, you begin to see a little bit of a drop in the yuan and a rise in the dollar. Stock 600 resources up by 1.42% at the moment. The deal. Microsoft's $69 billion deal for Activision Blizzard, the acquisition, has got a new chance at winning approval from the UK regulators. That's after the tech giant submitted an amended deal to the country's antitrust watchdog. Let's get the latest with Alex Webb. Alex, this is what's called trying to get it over the line with, I suppose, a little bit of acquiescence to the regulator.
Yeah, it is a useful kind of ability to save face for both the companies and, of course, the regulator itself, which was really the only holdout now in terms of preventing this deal from a regulatory perspective. The European Union has cleared it. Regulators in the US tried to block it, but ultimately it was pushed through by a court. The difference is, of course, that in the UK they were blocking it on the basis of potential dominance in cloud gaming. That's where you're playing on the cloud. Microsoft, of course, has its Xbox platform on which it could do that. In the US, the argument was, well, will they just dominate and the platforms and pull games such as Call of Duty away from, for instance, PlayStation? Microsoft successfully made the case in the US that it didn't make economic sense for them to do that. Now in the UK, they've offered this big concession whereby they will license essentially the distribution of their games in cloud gaming to Ubisoft, which they hope, and a lot of the consensus at this stage seems to suggest that people think they will assuage the CMA's concerns.
Yeah, they're going to sell the rights to what the next 15 to Ubisoft. Ubisoft is powering ahead. It's up over 6%. Let me just check for our viewers. 6.69% on the back of that. Now, mud in your eye to London. Arms off to the NASDAQ for the IPO. But I suppose that's about reputation and competition. But what do we learn from the filing from ARM?
The thing that was particularly interesting were 2 points. There was an earnings piece which showed that actually their earnings growth is, well, they has shrunk. They haven't actually grown in the past year or indeed the most recent quarter. That isn't unique in the chip industry. And in fact, it's because there are large tracts of the chip industry that aren't growing that ARM itself is having a tougher time of things. That also suggests they maybe don't have the same sort of exposure to AI that their investors would like, or their board would like you to believe, but also that they are not similar to Nvidia, which has massive growth. The second piece is actually the way they are exposed to China. They're about 25% of sales to China. It goes through what used to be a subsidiary, ARM China. It is the really interesting detail was that they only now control 4.8% of ARM China. So that is a little bit of a risk. It means that they don't necessarily have direct control over the way they do business in that country, but yet they have significant earnings exposure to it. So those were the two big jump outs from a financial perspective in the filing.
Okay, Alex, let's see what happens with the Microsoft deal. And just as Ubisoft, as I said to you, is one of the key beneficiaries, let's just check the price. 28.72. The stock rose as much as 7%. The French company has signed a deal with Microsoft, we understand, or it will sign a deal. And this is for Microsoft selling the rights of all the current and future Activision games released during the next 15 Ubisoft, the next 15 that are released. So there you go, the winner, the vicarious winner in the Microsoft Activision Blizzard trade is how to get around the regulators, Alex Webb. Okay, let's talk about the BRICS and the leaders. The gathering, the summit is kicking off today. But before that, the Chinese President Xi Jinping is being hosted by his South African counterpart, Cyril Ramaphosa. Let's get across to Jen Zabajaja. She's on the road. You've left Joburg. You're in Pretoria. Big moment for these leaders to meet. Jen, good morning.
Morning, Manus. Yeah, definitely. And you can sense that on the ground here. We're just a few minutes out as we're hearing from Xi Jinping actually coming to start the one and only official state visit that is happening this week amidst all the other BRICS activities that are happening. But as you mentioned, this is very important. And just the fact that they're hosting the state visit is very strategic and important to both of these countries. From the Chinese perspective, South Africa is its biggest African trading partner and has been for the past 13 years. And from South Africa's perspective, China is one of its most important investors. And South Africa was actually the first African country to sign on to China's Belt and Road Initiative. So this diplomatic relationship goes back over 2 decades. So what we're hearing these two leaders are planning to discuss is how to further deepen that relationship and how to potentially explore new opportunities in various sectors, from mining to agriculture and, of course, energy, which is of great importance here in South Africa. And so we're expecting them to speak about that, but also talking about what sort of reforms they're looking for on the multilateral, within multilateral institutions that they maybe can agree on, and also how to diversify South Africa's exports to China. But because, of course, we know South Africa imports a lot from China, but they do not believe that they're getting the value add that they potentially could. And so a lot on the agenda today. And so we're just waiting here for China's President Xi Jinping to arrive, which we're being told is imminent, Manus.
And another bilateral will be the Indian Prime Minister Narendra Modi reportedly meeting with Xi this week. What do you think is going to be top of their agenda?
Right, Manus. I'm glad you stressed that it's reported, because we're still unsure. And from both sides, what we've heard is that there is a potential for this bilateral meeting and that their schedules, as of yesterday, was still being finalized. But we did hear from the Chinese ambassador saying that despite a number of disputes that they have, of course, the most well-known one is probably their land border dispute, they do share a lot of common interests. And especially if you factor in the point that India and China are the biggest BRICS nations. They make up the majority of the economic activity and the GDP of the BRICS nations. They have a lot on the agenda to talk about. Whether or not they're actually going to meet one-on-one is unclear, but we will see them on a stage for the first time since last year at the G20.
Okay, so big moments all around on the geopolitical front. Jen, thank you so much. Jennifer Zabazaja in Pretoria. Coming up in the show, the global bond yields are soaring. We're going to discuss what does higher for longer really mean to investors as you position for the U.S. economic resilience right here on Bloomberg. Good morning.
this week. Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
It's the conversations that matter, the insights that you need. They're right here on The Pulse with me, Manus Cranny, in Dubai. So the global bond yields are soaring. Investors are positioning for this higher for longer interest rate cycle. 10-year paper in the States hit the highest level since 2007, and 10-year JGBs hit a level we haven't seen since 2014, testing the metal all the way around. Anita Gupta is the head of equity strategy at Emirates NBD. Good morning.
Good morning, Manus.
Here we are, real yields at 2%, a bond market that's lit up earlier than Christmas. What does it mean for risk?
Very strangely, what we found was that in the first half of 2023, yields and equities were highly correlated. So you had yields going up and you had equities in developed markets performing well. Now we've come back to fundamentals. So we saw a sell-off about 5% on global equities as yields have risen, with the 10-year at 4.33%, with the 2-year close to 5%. So definitely there is an impact on risk. But have the yields peaked? That's what's important for equities.
Do you think they have peaked? I mean, I've got Stephen Major saying, step in and buy bonds here. You've got Bob Michael saying, buy every dip. But yet we have this narrative that this isn't revolutionary, this is returning to norm. So do you think we are going to see 5% on bond yields? Are you ready for 5% on bond yields? What would it mean for you on equity to bond allocation in the portfolio?
I think this current inverse correlation is going to continue. If you continue to see yields go higher, I would definitely be worried about what's happening, especially to US equities, European equities, Japan. We've got all 3 10-year yields at about a 10-year high. What we are looking at is that all further hikes, especially for the Fed, are data dependent. And inflation is softening, so hopefully we would look at maximum another 25 basis point hike.
Well, I hopped into the green room with you earlier, and I said to you, so real rates are 200 basis points. What does that mean? And you very firmly said, well, it means the Fed doesn't need to hike any further. And if you look at the op-ed that we have this morning, Kashkari reflected on the neutral rate as being 200 bips above where inflation is. With that in mind, the Fed is done, let's say, if that is the theory. Would that mean that you'd be a buyer of dips in these equities? There's going to be a few jolts, all right? We're not going to stop at 433. There'll be a few attacks on the upside in yield. That will deliver entry opportunities for you in equity? Is that the correct way to look at what you're saying to me?
At this point, I would say that yields are the biggest catalyst for equities either way. However, we've just had an earnings season better than expected, expected to be the trough in earnings for the US at least. So if that's the trough in earnings, eventually equities will perform based on earnings. And this is where we come to the differentiation. Very interesting fact which I read on Bloomberg, which I think was put out by Goldman Sachs. Only 50% of the companies listed in the US are profitable. So again, here we come back to quality. It's not about just buying the dip. It is about buying quality. And if yields are high, buy companies with strong balance sheets.
Tell the truth. Have you got a little bit of NVIDIA?
Well,
I know you don't do individual names.
Oh, we do. It's okay. I can comment on NVIDIA because
I like it. I like a guest that can commit.
Yes.
Commit to me.
Okay, so what we are looking at for these AI-driven rises in equity performance, and now there is a gap of about 60%. So any company which is an AI enabler or an AI platform is roughly about 60% above another company which is not caught AI in any form. And if you're looking at NVIDIA, you're talking here of about a 50% revenue growth expected this quarter over last year. This is coming back to what was happening with Amazon and Google on cloud. So they were having these 30 to 40% revenue increases, profit increases, cloud growing. Now that's come down a little bit to about a 15 to 20% growth. So the semiconductors and NVIDIA does manufacture the high-end chips needed for AI. So it is currently a win-win for NVIDIA.
Now, if I look at China, I'm desperately trying to talk to every CEO at Woodside Petroleum, saying small fissures in terms of the overall energy demand. You look at MSCI China, down 11% in August alone. They are grappling with the FX market quite desperately, I would say. Can you live, or would you dare to live, without China as an allocation? And if so, how would you allocate at all away from it?
We were a little brave. We went neutral EM Asia 2 months ago, and then we had a China rally. And then was it like, are we wrong? However, what's happening with China is you have this 1 month 10% rally and then it goes down again. So we don't want to be very heavily allocated to a very volatile market. I think, again, as we spoke earlier, markets don't behave on hope. Markets behave on reasonable estimates. And China needs to show some fact in terms of where that growth is coming from. You've had a number of houses downgrade economic growth. Again, we have had issues around real estate. We've had defaults. We've had investment companies that are not paying up. This is worrying. We're not seeing inflows into China. So we are neutral at this point on China. And I think we would be till we see some factual data that would convince us about the resumption of consumption. That's
hope does not pay the bills, does it, Anita Gupta? That is the bottom line. Thank you so much for being with me. That is Anita Gupta, Head of Equity Strategy over at Emirates MBD. She can live without a max allocation to China. Coming up on the show, not just gassing. Woodside Energy says talks with LNG workers have been constructive. We'll bring you our conversation with the Woodside CEO, Meg O'Neill. That's next on Bloomberg. Good morning. Quick snapshot of how the miners are doing this morning. Profits of BHP Billiton fall by 37%. They are slashing the dividend. The stock down by just under 1% at the moment. The rest of the miners actually aren't doing so badly, even though Billy's talk about earnings in iron ore, coal, copper and nickel all declining. So keep an eye on that. The rest of the energy complex is on the up. Have we hit a trough in China? That's the question I ask myself. Let's focus in on Billy's. They reported the lowest annual profit in 3 years. For more, let's get to Stephen Chachinsky. He joins me now from Singapore. What caught my eye, Stephen, down Woodside, down in Australia, and down this morning in London. Talk me through what caught your eye in Billy's. The dividend being slashed to 80 cents caught mine. Good morning.
Yeah, I mean, the dividend being slashed, you could see that maybe coming if you were looking at, like, Rio Tinto did the same thing in July. You know, they're also one of these major miners. But I think the focus, of course, is the outlook on China. It's not so surprising, given everything that's been happening in China with the economy, with the kind of real estate troubles that's been happening there. The stimulus in the country, according to the CEO of BHP, is that the stimulus in China is not. It's helping propping up some demand. The second half, they said second half demand looked better than the first half in their full year earnings. But still, when you look at where the Chinese stimulus is affecting the economy and affecting growth in the country, it's not coming through in demand for iron ore the way that they were expecting it to. And so because of that, it's looking very uncertain in China. And he was, I think pretty honest in the interview earlier, saying that it wasn't clear what's going to be happening with Chinese demand.
Well, just hold that thought, because, of course, Meg O'Neill over at Woodside, which closed down 1% in Sydney, she talked about the fragility of demand in China. Australia's biggest oil and gas producer, the first half results pretty much being overshadowed by the strike talks with the LNG workers. I caught up with Meg O'Neill, the CEO, a little earlier, and we talked about the current state of the LNG market in Europe.
The fact that the market has responded in such a significant way to the rumor of a potential industrial action suggests to me that the market is still quite fragile, and that European buyers and the European market is concerned about the levels of supply that they will have going into the Northern Hemisphere winter.
Briefly, Stephen, she's not outstandingly bullish on the forward pricing market, is she?
You know, I think one thing that she really focuses on is, there's a lot of uncertainty there as well. While she's not terribly bullish, I think it's really interesting that she called the possible strikes rumors, because there are discussions happening. There are unions threatening to strike, and while the strikes haven't started, they could start, if there's not a breakthrough in talks with Woodside, as early as tomorrow. Those strikes could begin in early September. If that does happen, you could see quite a bit of upside on gas prices, not only in Europe, but also Asia as well.
Stephen, thank you much. Stephen Sochinsky there in Singapore on all things energy. The BRICS leaders kick off the summit today. We discuss. Microsoft submits a new deal to the UK regulators to get its $69 billion takeover of Activision Blizzard over the line. Treasuries are steady after global yields soar on higher for longer rate bets. The US 10-year yield hits the highest since 2007. Japan 10-year yield also trades at the highest level in 9 years. Plus, we're live to Pretoria, where South African President Cyril Ramaphosa is hosting his Chinese counterpart, Xi Jinping. That's ahead of the BRICS summit. Good morning. It's The Pulse. I'm Manus Cranny in Dubai. The BRICS leaders summit kicks off today, but before that, the Chinese President Xi Jinping is being hosted by the South African counterpart, Cyril Ramaphosa. For more, let's get to Pretoria. Jen Zabazajeh is outside government buildings. These two leaders have a lot, let's say, structurally in common. What will top the agenda today? Jen.
Yeah, Manus, good morning to you. And these two leaders have really, over the past few weeks, days, weeks, and months, really stressed the importance of this relationship. We actually saw yesterday Chinese President Xi Jinping actually take out an op-ed, an editorial in the papers, talking about just how important this relationship is to their country. And from his perspective, it is a vibrant economic relationship that could be potentially deepened and further explored. And he talked a lot about how rich South Africa is in a number of different sectors, and potentially how that is an opportunity for Chinese investors, but also for South African businesses to then export to China. Because for the most part here in this country, in South Africa has been a major importer of Chinese goods, which is significant for China, especially when we look at the African continent. This relationship is very important to both of them, but just going forward, these leaders are really trying to look at what more can be done. And really, they have a lot that they're individually interested in, depending on which region you're sort of looking at.
Jen, they're all lined up there, full red carpet, ceremonial, ready to go. Jen Zabazajeh in Pretoria, tracking the BRICS summit. Well, let's just expand that conversation to the EM space. Phoenix Kalen is head of emerging market research over at Societe Generale. We were looking at the theatre of BRICS, and we had Jim O'Neill saying, well, really, apart from China, everything else has been relatively disappointing. So let's focus in on China. How important is it for Xi Jinping to regrasp control of the yuan, which seems to be failing at the moment, the biggest fixing on record again? How important is that to Xi and to the PBOC? Good morning.
Good morning, and thanks for having me. Yes, I think the currency is definitely one of the key underpinnings of the economic policy around China at this point, given how the data has massively disappointed, especially over the past month. We are looking at indicators that are suggesting that China's facing all-out deflation across all the various economic indicators. There's been a massive disappointment, and the currency fixings, they've tried to fix it much stronger each day. We've seen the fixings rise up to even 1,000 bips. So similar to the levels that they were trying to fix it stronger last summer as well. So very high levels. And this has actually still failed to curb the yuan weakness. And so it is going to be quite a challenge for the premier to try to rein in the economy in terms of all the dysfunction that's happening across the state of leverage, the state of the property sector, the state of consumer confidence. And so I think this forum here that we have at BRICS is a chance to maybe take a step back, maybe showcase how China has allies, maybe expand that kind of grouping in the BRICS, and promote kind of a soft power that China's projecting.
Soft power will not stop outflows and may indeed, as you said, the dysfunction may stymie inflows. When you look at global flow to China from an EM perspective, where are we?
So global flows, I mean, this year we've seen about $100 billion worth of outflows from the Chinese bond markets. So outflows are still continuing. There was a little bit of an uptick in the summer, but that was fleeting. And there was a bit of an uptick earlier this year around the China reopening, and that faded as well. So people are very much concerned around the geopolitical context with which China's operating, and then the long-term structural challenges that China face that is going to be quite medium to long-term in nature, and that growth decline is curbing the investment appetite from a lot of investors.
And now one other major meeting which we understand or is reported to take place this week will be Xi alongside Narendra Modi. Now you have a vicarious risk trade that I can sort of lay out, which is long rupee, short yuan, which is almost the very personification of that geopolitical meaning. But stand up the trade for me in terms of the narrative, because it is about current account deficits and it is about fundamentals.
Yes, and it's about carry as well. So India's investment appeal has massively improved over the course of this year. It's an economy that's exceeded expectations on the growth front versus China, which has disappointed expectations. India is now being investment-led in terms of its recovery. So that's a really appealing investment thesis for a lot of investors. And then there are, things around the carry structure, the kind of momentum that we see, especially in the bond market, where we think Indian bonds stand to benefit from the positive momentum that we see in Indian assets and the potential for inclusion into the large benchmark global bond indices. So that should encourage flows as well. So I think there are key differences around macro fundamentals in terms of how the growth outlook looks for India versus China, as well as the geopolitical context, where India is maybe a bit more balanced in its and more nuanced in its relationships with the Western partners, and less prone to the capital outflows that we might see out of China.
And part of the underpinning of this is also on the FX reserves. And this is something which I look at, for example, when I'm looking at Saudi Arabia and those FX reserves, et cetera, divesting of treasuries, mega projects going on there. But from the FX reserve point of view, it's also an underpinning of the long rupee on a broader FX dynamic, isn't it?
Yes, the Reserve Bank of India has been very cautious around trying to prevent massive levels of volatility in the rupee. And so they are there intervening on both sides of the equation, trying to prevent excessive weakness or strength and smoothing out the volatility. And that does help to instill a bit of confidence in the stability of the currency and its attractiveness as a funding asset.
We're constantly trying to understand what global weather patterns mean. I had the CEO for Dubai Airports here this morning. What does it mean for tourism? We have El Nino. I've had WhatsApp after WhatsApp from various groups about the longer term ramification. Within the dynamic of commodity pricing, when you look at the things like rice, etc., just talk me through the top level of the risk from El Nino, and to what extent does that play into how we should think about allocating?
Yeah, so I think the changes in global climate patterns is going to severely impact commodity prices over the coming years, decades. And in terms of I think that the key implication is around the heightened volatility that we're likely to see out of commodities markets. The structure of the market is going to be still quite diversified and differentiated. And the things like base metals, things like oil prices, energy reserves, those are still going to be helped by the supply constraints that are implicit in the market. And so prices there can still be supported. I think also the food prices, agriculture prices, because those are so heavily influenced by weather patterns, and those weather patterns are becoming much more volatile, much more violent, those can also exert upward pressure on grains prices and all the components that are necessary to kind of the food basket in a lot of the EM countries. So overall, I think there is structurally still upward pressure on food prices, on commodity prices, and those are going to be notwithstanding the global slowdown that we're experiencing.
Yeah, I mean, just on the whole rates narrative, which will drive EM to DM, we are in this new zone, aren't we? We're debating about whether 10-year benchmarks in the States will get to 5%, whether the Fed has done enough. Neutral rate, where is the neutral rate? 200 basis points above inflation at the moment, which is where we are with real rates. When you look at the rates, the global rates landscape, where is EM to DM in terms of the narrative? And I suppose that's more on the debt side, on the bond side at the moment that I'm curious.
So the picture is really quite differentiated. So we've got like heat maps of the valuations picture that we map EM versus DM and how that's played out over the past 10 years as a benchmark. And we see that, for instance, LATAM bond markets, fixed income markets are offering very attractive levels relative to where they've been trading over the past 10 years, relative to the kind of real levels of yield that we've seen there. And so in those kinds of valuation metrics, LATAM markets, Mexico, Brazil, even though there have been lots of movements this year already, those still offer quite attractive valuations. On the other hand, places like Asia, those are not so attractive, given how far yields have declined already in this kind of disinflation narrative now that we have in place, and the downward drift in yields over the past several years. So it's quite a mixed picture, but what does stand out is that there are pockets of value, especially out of LATAM, and now especially out of a few markets in the CE complex.
Okay, it's all about differentiating, not just in equities, but in the bonds and EM space as well. Phoenix, thank you so much for being my guest this morning. Phoenix Kalen, Head of Emerging Market Research at SocGen, as the BRICS leaders gather in Pretoria and across South Africa this week. Coming up on the show, we're going to take a look at the future of funding for women's football. We're joined by the CEO of Mercury 13, which has just launched a $100 million multi-club fund. Where to invest on Bloomberg. Good morning. Conversations that matter, the insights that you need right here on The Pulse. I'm Manus Cranny in Dubai. Well, the viewing figures show that Sunday's World Cup final set a new UK record for women's football matches, with an average of 13.3 million people watching the game. Spain's victory, of course, was hard to take for the Brits. As interest and money in the women's game grows, how will the funding of women's football clubs change? My next guest is launching a $100 million multi-club fund to buy controlling stakes in women's football clubs. It is Victoire Cogevina, Reynal, CEO of Mercury 13. Victoire, welcome to the show. Mercury 13, you're raising $100 million. Have you got there yet? And where's your first major multi-club target? Is it going to be Spain, UK, Italy? Where? Good morning.
Hello, Manus. Good morning, and thank you very much for having me. We are launching Mercury 13 today, and it's incredibly exciting, especially with what happened at the Women's World Cup. Our first target is here in England. We are not allowed to share the news just yet. We will later this week, but it's definitely a club that we're very passionate about and that has tremendous potential, and we're lucky that we're going to be working with them moving forward. Our second target, and this, I promise, was not planned, is in Spain. So we saw both our nations at the final, which was great for us.
Tell me this. You are now going to be in charge of capital You will decide in part how wages are paid. The money differential is spectacular in the sport, isn't it? I mean, women paid $30,000 a game. The winning team, $270,000. You know, male colleagues get $1 million for an Instagram posting. Will you lobby to raise wages actively and really raise wages in women's football?
Absolutely. I have done for the last 5 years of my career, so this is not going to change right now. Right now, there's also a commercial deal for it, right? There is really data that can back that it's a good business, and raising the wages is part of it and is very much justified. So we're going to be working on this 100%.
Given the viewing figures that we saw in the Australian semi-final, the women's final of Spain, England, what's it going to do to pricing pay-to-view women's football?
Well, we're going to see everything starting to rise, right? It's not only the broadcasting rights, it's not going to be only the commercial, deals that we're going to be seeing. But it's also understanding that women's football is bringing in a whole new audience into football that for the last 100 years we haven't seen, which are women. And to me, that is, $1 billion opportunity, if anything. Women, we control spending power in homes, as you know. And we are going to be able to now, as we are welcomed into the sports, to be a part of those decision makings, whether it's by taking our entire family to a stadium or traveling to watch a club and be a fan of it with everyone, in the household. It really poses an enormous commercial opportunity. And at Mercury 13, we were going to support our clubs with our stellar management team that has been prepared to work on everything from the commercial to the financial to the on-pitch performance to make sure that we are capturing all of this opportunity and that we are accelerating our clubs' victories on and off the pitch.
You said that you've been an advocate of higher wages, remuneration and deals for women for many years. So the money you lend, the money you give, will there be strings attached to that around remuneration for the girls on the pitch?
Absolutely. I mean, it's going to be a part of the financial model, right? This is a business at the end of the day. There's a lot of people that invest into women's football as a charity, as a form of charity. We're not looking at this as charity. Obviously, women's football is very clearly a gender equality movement, one more powerful than the Me Too movement, in my opinion. But at the end of the day, it is a business. We have investors and we need to create returns. And I think that actually making sure that we build that argument that women's football is an incredible investment asset will end up helping the whole industry at large. And so, increasing wages for players is just the beginning, but it needs to be in tandem with what they're doing off the pitch on the commercial and broadcasting rights. So it goes really hand in hand.
So let's just talk about the Lewes Football Club. It's fan-owned at the moment. What's going to happen to that model, if at all? I mean, can you just give us a sense? I know that you've got some challenges around this in discussing this, but what do you think the biggest fundamental change would be if, and I emphasize the word if, that deal comes to pass later in the week?
I'm really not at liberty, unfortunately, to discuss more about this, but I will say that with all of the investments that we're making, we're looking at strong operational teams that are existing, right? And clubs that need capital to move faster. Right now, women's football waits for no one. It's moving at the speed of light. I actually had a baby girl a few weeks ago, and I'm here. So clearly, it hasn't waited for absolutely anyone. And we need to make sure that we're capitalizing on this and making sure that we can grab the timing, get to the commercial side of things as fast as we can, and start, getting quick wins.
Victoire, we wish you well and well done on raising the funds and deploying them actively. We wish you well with whatever deals may come to pass. Victoire, Cogevina, Reynal, CEO of Mercury 13. Women's football is on the up. Coming up, depositors are seeking out better returns on their savings. What does it mean for the US regional and mid-sized banks? We discuss right here on Bloomberg. Good morning. the conversations that matter, the insights that you need on the pulse with me, Manus Cranny in Dubai. Overnight, S&P Global have downgraded and cut their outlook for a slew of smaller, mid-sized US banks. S&P says the clients move funds into accounts with higher interest rates elsewhere. Deposits decline in the banks. Quid pro quo. Squeeze on liquidity. Tom Metcalf is with me. You know, Tom, in 2007, in September 2007, there was a physical run on a bank. It's an image that will always be indelibly etched on my mind. It was Northern Rock. These kind of downgrades, are we inching towards another electronic moment of another disruption in flows? Good morning.
Hey, good morning. I mean, look, that's the big question, right, Manus? I think probably it's not really an existential crisis yet, but again, more bad news for these small and mid-sized US lenders. So the Co-Americas, the Key Corps, they're all being downgraded, and a few more kind of having their outlooks sort of cut by S&P. Comes after a Moody's move as well. I think, you know, there are these negative trends, and that is obviously not good for these smaller banks. But in terms of when you look at the broader banking systems, you know, I think those bigger banks are doing well, and that will probably sort of offer a bit of a buffer as well.
Where do you think the biggest pressure point is? I mean, if I'm looking up T-bill ETFs, you know, and looking for the ticker for that, I mean, that spells danger for everybody in the United States of America, because if I'm unleashed on an ETF, but that is the personification, that is the pressure point, isn't it, in terms of the flow?
Yeah, exactly. And, you know, as ever with these things, who's everyone looking at? Jay Powell. You know, he'll be speaking this week. And, you know, what the Fed does with its interest rates is really just going to dictate, you know, as you say, how bad this crisis gets, right? If they continue to rise, you know, that's when we might start asking those questions you posed at the start. Of course, if that kind of whole sort of backdrop eases a bit, then things are going to look a lot rosier for these banks.
And it's going to be a bit of a tight squeeze on some of these lenders. Do you think the worst is past, or just briefly a little bit more turbulence to come?
Yeah, I think probably a bit more turbulence. It feels like we're just kind of still in the midst of this. I remember I was talking about this months ago, right? And I was sort of feeling this regional crisis didn't have too much longer to run. So I'm going to couch my bets and say, you know, there's still a bit further bad news ahead.
Oh, dim and gloom. That wasn't how I wanted it to end, Tom. Tom Metcalf there, our managing editor for finance in London. It could get a bit tricky as we go ahead. Pretoria is the destination for Xi Jinping to meet his host, which is Cyril Ramaphosa, the head of the BRICS gathering in South Africa. The flowers are out, the carpets are laid as they await the arrival of some of their biggest trading relationships onto the red carpet. Narendra Modi is said to meet with the Chinese Prime Minister, reportedly meeting with him later. This is BRICS wrote large. What will the political and economic power and consequence be of BRICS? Kriti Gupta is up next from New York, along with Tom McKenzie in London with Surveillance, the early edition.